Welcome once again, everyone, to the Annuity Edge webinar. My name is Babafemi Emmanuel, and I'll be anchoring this meeting tonight. It promises to be a very impactful and informative one tonight. We have our retirees, our daddies and the mommies in the house, and then we have all our people who are also planning and thinking about retirement and are trying to make a decision but need clarity. That is the purpose of this webinar. So somebody invited you here, a financial advisor with Heirs Insurance. That person has your interest at heart, and they're trying to make sure you get informed, you get clarity, so that you can, understand how all of this works. And that is why we are here. The retirement time is not something to make a mistake about or to gamble about. It is important you have all the information you need so that you can make informed decisions. So without wasting so much time, we're going straight up into the matter for today. Today, we are looking at why many retirees are migrating to annuity and what you must do immediately, right? So we have in the house our regional manager at Heirs Insurance, Mr. Larry. Mr. Larry is here. Mr. Larry Aladeyelu is here tonight. He will be speaking briefly as a way of opening remark. And then after that, we'll move straight up into our guest speaker, Mr. Babafemi Emmanuel. Mr. Babafemi Emmanuel is the Retail Development Manager with Heirs Insurance. He is going to be addressing the subject matter and providing clarity. After that, we're going to take questions. If you have questions, we'll be opening it up for you to ask your questions, and then we can provide answers. Okay. Please let me know if you can hear me. If you can hear me, kindly type in the comment section. If you can hear me, I would like to see your comments on the chats if you can. Yeah, and then once you join on the call, you can just go ahead and drop your name on the chat. We are going to recognize you at some point, whether you are a retiree or soon to retire or even a financial advisor. Just go ahead and type your name on the comment section. Yes, at this point, let me quickly welcome our regional manager for a quick opening remark. Mr. Larry, please, over to you. The floor is yours now. You can unmute and speak, sir.
All right, good evening, everyone. Good evening. Yeah, I want to believe everybody can share me. So, let me just be grateful for this kind of opportunity that has been open to all our retirees, because we have our retirees outside there. After they retire, they don't really know what to do. So this is an avenue that will make them to know how best they can access their pension. Briefly, I would like to say that retirement is a leaving the workforce or working for somebody, or let me say, that thing that I can do for myself after retirement. What is it that I can do for myself after retirement? Because when somebody is retired, I would like to say that the person is not tired. So after retirement, by the time I get my lump sum, because that lump sum is supposed to be used for something tangible for oneself, so that apart from what I'm getting from my pension, I should be able to have something that I'm doing personally to sustain me and my family again. So I want to use this opportunity to welcome everybody to this webinar. This webinar I'm going to call a retiree conference. The reason for this is because I know that we have retiree in the house and those ones that are about to retire. So I want to assure them that before the end of this webinar, um, for those of us that have not really known what to do, or those of us that know what to do before now, by the time we end this webinar, we are going to know more. And if you don't know what to do before now, by the time we get to the end of this retiree conference, then we're going to know more on how to have the best access to our pension. And for the retiree that are here, I would like to use this opportunity to tell you that you should tell your friends, um, uh, tell your friends, invite them for this conference. And those ones that are about to retire, I would like to say that you should invite your friends too, so that you're not going to be the only one that is going to benefit from this kind of opportunity. So let me just keep the floor open for whosoever that is going to take us for this evening. Emmanuel, thank you very much. So at this point, I will give the floor back to you. Thank you very much.
Thank you
All
so
right,
much.
Emmanuel. Yeah.
Thank you so much, Mr. Larry. Greatly appreciated. So we have heard it all from our regional manager, Heirs Life Lagos Central Region. Thank you so much for opening the floor so we can proceed to the next subject, the next item on the program. I want to introduce somebody very special. One of our senior managers is now Mr. Babafemi Emmanuel. Is not just an expert in this industry, he's a seasoned pension and retirement expert and a retail development manager with Heirs Life Assurance. Babafemi has helped many retirees and pre-retirees understand their pension options, successfully guiding numerous clients from program withdrawal to annuity, so that they can have a lifetime financial stability. He is known for something very important, for simplifying complex concepts, providing clear practical insights that empowers people to make the right retirement decision. Gentlemen and ladies, let me make welcome to take it from here, Mr. Babafemi Emmanuel. Please, Mr. Emmanuel, you can unmute and speak now.
Thank you very much, Mr. Okoli. Good evening, everyone. I hope you can hear me very well.
Very well, sir.
Welcome to this webinar of today. This is the second edition, and so far so good. It has been a very educative webinar. And today, I will not want to waste much of our time. I would like to go to the topic of today. My name is Emmanuel Babafemi, and I'm a retail development manager at Heirs Life. And I want to appreciate everyone that is on tonight's webinar. And I welcome you to our daddies and mommy that have joined this webinar. It promises to be a great night and a well-educative night. So thank you for being part of tonight's webinar. Okay, so to the question of topic of the day, why many retirees are migrating to annuity. All right, now before I actually dwell on that topic, I would like to give a background as regards to annuity. And we need to understand what annuity stands for, and also the second option, which is program withdrawal, what it actually stands for. And you know, these two options for pension are government, can I call it a government initiative, in order to give every retiree the opportunity to choose between the two. So at the top point of retirement, actually, a retiree has two options, which and how do this option, how did it come about? Before 2004, we have the whole scheme pension, which is also called Defined Benefit Scheme, which is the DBS. And during that time, it was the government that was taking the responsibility of paying pensions for retirees. And by the time the president then, the first democratic president, which is Chief Olusegun Obasanjo, came into power in 1999 and saw the backlog of all the pension arrears that is being owned by the government. It became dawned on him that no, this cannot be sustained. They need to look for a way. Because of that, the pension sector was privatized and was handed over to the private sector. And if we can vividly, it was during him we have organization. So some government parastatals were privatized because government could not manage them any longer. So pension also was one of those sectors that were privatized then. So in 2004, the contributory pension scheme known as CPS was introduced, and in 2005 it was enacted, and that was what brought the advent of the PFAs, the Pension Fund Administrator. The likes of Stanbic IBTC, NLPC, Trust Fund, Hawk Pension, and the likes. So at that time, what we have as a pension, the only option, there was only one option, and that was program withdrawal. So any retiree that retires then only has one option, which is program. But of course, this program withdrawal, there are a lot of challenges that comes with it, because program withdrawal deals with an expected lifespan. According to Pension Reform Act, Section 7, subsection 1B, say program withdrawal, which is paid monthly, quarterly, or annually, pay for an expected lifespan, challenges being posed at a program withdrawal. So the federal government, in their wisdom, started thinking of what other alternatives or alternative can we introduce to people that are retiring, so that at least they will have another option. And so they understudy the pension system of some countries, the United Kingdom, the United States, also South Africa, Kenya, and Ghana, and some few other countries. And all these countries that I just mentioned, they administered only annuity. And that's how the federal government discovered annuity in 2009, and it was introduced and enacted in 2010. So now, what are the features of this annuity? One of the features is it pays for life. So annuity pays for life, program withdrawal pay for an expected lifespan. Okay, so this option was introduced so that at the point where a retiree retires, he can actually pick any of these two options, either program withdrawal or annuity. And that is how we have these two options for pension. We have the program withdrawal, which is being administered by the pension fund administrators. And then we have the annuity, which is being administered by a licensed life insurance company. However, it is not owned by insurance companies, just like people may think. It is just being administered by insurance company. Those that warehouses the pension funds and assets, we call them the PFCs. So the PFCs are the pension fund custodians. They are the one that manages and warehouses pension fund and assets. And we have three of them. One of them is our sister company, which is UBA Pensions. And we have First Pension and Zenith Pensions. So these are the three PFCs. So for any retiree that is migrating to annuity, your pension fund is not with the insurance company, but is with the PFCs. Is with the PFCs. So, and these PFCs are the one that is managing this pension fund and assets. Okay, now to the question of the day, why are people migrating into annuity? Many people are migrating to annuity primarily for the financial security and guarantee lifetime income they provide, especially in an environment of market volatility and increased life expectancy. So a lot of people are migrating to annuity because annuity promises a guaranteed lifetime income. And no matter how volatile the financial markets, the economy is, annuity will continue to pay you consistently for a lifetime. And I want to share an example. During COVID in 2020, so many PFAs struggled to pay retirees under program withdrawal because of the economic downturn. But people that are on annuity were paid promptly, monthly. So no matter the economic situation, economic downturn, or market volatility, annuity will continue to pay you regularly and consistently. So that is one of the things we need to understand about uh, annuity. So it gives a financial security and guarantee lifetime income. So there are about 5 or 6 key reasons that I would like to share. Number one is guaranteed income for life. So annuities are the only financial products on the market that guarantees a stream of income that a person cannot outlive, addressing the concern of longevity risk. So you cannot outlive your monthly pension on annuity. Outlived means that you cannot subscribe for annuity and then your monthly pension stops. No. But under program withdrawal, you can actually outlive your monthly pension because there is life expectancy attached to program withdrawal. So number two is protection against market volatility. So when there is market volatility, the it doesn't affect your monthly pension under annuity. So in the case whereby the market is fluctuating and there is uncertainty, your monthly pension is guaranteed under annuity. Then number three, it attracts payout rates. Now, what we mean by attract payout rate is what you earn under annuity is higher than what program withdrawal offers. And this also we need to emphasize more on. So annuity pays higher than program withdrawal. This is a fact. So under annuity, you tend to earn more than when you are under program withdrawal. So the payout rate on annuity is higher than under program withdrawal. So I think I'm on the fourth point, the tax deferred growth. Tax deferred growth. The money within an annuity grows tax deferred, meaning individuals do not pay taxes on the earnings until they begin making withdrawal. So what that means simply means is your pension under annuity is not taxable. Your pension under annuity is not taxable because annuity is more or less like using your retirement savings to buy a life insurance for yourself that guarantee to pay you for life. So it's like you're buying a life insurance that guarantees to pay you for life. So what you are earning under annuity is not taxable because it's it's more or less like a financial cover for you. So it cannot be taxed. So what you are earning under annuity is not taxable. Then also simplicity and professional management. Annuity offer a simple, straightforward retirement option where a lump sum is managed by professionals, preventing potential mismanagement of funds or lavish spending in retirement. So annuity provides simplicity and professional management. There are different bodies that regulate annuity. NICOM, that is National Insurance Commission. We have the PENCOM, the National Pension Commission. We have the CBN, the Central Bank of Nigeria. So these regulators, they are the one ensuring that the funds under annuity are well managed and are well protected, are well invested, they are well guided. So annuity offer a simple, straightforward retirement option. Also, like I said earlier, annuity offers a high payout, which it's an opportunity for all retirees to take advantage of. So it gives you an opportunity to earn more. I think I'll say that earlier. So these are some reasons and more why people migrate to annuity. So the question now is, what is stopping you from not migrating into annuity? Why are you not migrating into annuity? What are the concerns you are having? that is stopping you to migrate into annuity? I think these are the questions we need to ask our retirees on this platform tonight, so we can know why they are not yet enjoying those benefits that is attached to annuity. At this point, I will like to stop here and welcome some questions from our retirees. Thank you very much. God bless you. Over to you, Mr. Okoli.
Thank you so
Hello,
much,
Mr.
Mr. Emmanuel.
Okoli.
Awesome. Awesome delivery. Yeah, we are so grateful for the clarity you've provided on the subject matter, why many retirees are migrating to annuity. So right now, we'll just take a few questions because we promised that this is going to be less than an hour so that we can just deliver the points, take questions, take feedbacks, and then Mr. Emmanuel will come back again and show us the process of actually migrating to annuity. If somebody wants to migrate to annuity, what is the first step? What is the next step? And how long does it take? Mr. Emmanuel will come back to that. But before he does that, let's take questions. Let me take a few questions from some of our retirees that are in the house. So you can go ahead. All our daddies and mommies in the house, you can unmute your mic or raise your hands with the emoji at the bottom of your screen, and then we can, call you up to ask your questions or share your thoughts about the subject matter. Okay, I see our daddy Emmanuel. Emmanuel Iodai. I don't know if I got that right. We're glad to have you. Good evening, sir. Your mic is muted, sir. If you just touch the mic, we will hear you. Yes. Yeah. So you can ask. Okay. Can anybody hear me, please?
That is my.
Okay. I'm not sure if you can hear me. Can anybody hear me?
We can hear you.
We can hear you.
Okay, great. So, our daddy Emmanuel, are you asking a question? We'd like to hear your voice, Mr. Iordye, Iordye, Emmanuel. I see you are speaking, but we cannot hear you. You have to touch your mic button so you can unmute. Okay, while that is going on, I think it might just be a little technical difficulty. So do we have any other question? Any other retiree in the house? Yes, please. Okay, my precious, I see your hands are up. Kindly unmute and let's take your question, please.
Okay, thank you for the privilege.
You're welcome.
Can you hear me?
Very well.
Okay, so my uncle wants to find out, is there with me? He was invited to your program by one of your marketers. So he wants to know what makes your company unique. Wow, what makes your company stand out among all the companies that are offering annuity? Because he has a number of companies that has come to his organization to educate them about the annuity. And now one of your marketers is on him, persuading him to come buy an annuity plan from your company. And so he's asking, why should he come buy from your company?
Okay, thank you very much, Precious. Yeah, so I would like
You're
Mr.
welcome.
Emmanuel to respond to this question. Why is Heirs special? Why should anybody come to Heirs Insurance for annuity and not go to the other insurance companies?
Okay. Thank you very much, Mr. Okole. My precious, thank you for your question. Okay. Now, Heirs Life Assurance is #1 digital insurance company in Nigeria. That is a fact. And you can fact check this thing. It's #1 digital insurance company in Nigeria. Now, that aside, #2, here's the insurance company has a capital base of over 50 billion naira. Our capital base is over 50 billion naira. Now, there is something happening in insurance industry now. NICOM has increased capital base. So there are some insurance companies that are forming. Yes, Life Assurance is standing out. Our capital base is running to over 50 billion naira. That is aside that. Now, Heirs Life Insurance is one of the member companies of Heirs Holdings, which is owned by our chairman, Mr. Tony Lumelu. Okay, our sister companies is United Bank for Africa. That is why any UBA bank you go to in Lagos, you can feel our presence there. We are virtually in all the UBA branches in Lagos. Now, Heirs Holdings is one of those, is the umbrella of Heirs Life. So under Heirs Holdings, we have the UBA, we have Transcorp Power, we have Transcorp Hotel, we have Avon Medicals, we have Heirs Life Assurance, we have Heirs Tech, and so many other conglomerates under Heirs Holdings. So it's a huge, big, industry, and we are doing so well in the market. We are fantastically doing well. You can check out our claims. We pay claims within 2 to 3 working days. You receive your claim. We attend to you. Our customer service delivery is top notch. And these are the things that makes Heirs Life Assurance stand out among its peers. So Heirs Life Assurance is not just an insurance company, but it is a composite insurance company. And we are strong, reliable, and we give a very fantastic and good service to all our clients and those that wants to do business with us. So with this, you can be rest assured that you are dealing with the right company. You are with the right insurance company because of our qualities that we possess. Thank you very much.
Okay, thank you so much, Mr. Emmanuel. Precious, I believe you heard clearly, and then your uncle, who is close to the phone, also is listening. Please kindly confirm you got that clearly.
Yes, we got it, and we're gonna verify all what he has said. Thank you so much for the clarity.
You're welcome. You're welcome. So you can, like you said, you can do your own research. Heirs Insurance is the leading in Nigeria today, and then of course Tony Elumelu is the chairman of the board for Heirs Holding, and Heirs Insurance, like Mr. Emmanuel said, is not alone. Many insurance companies don't even have a bank attached to them. UBA Bank is the name, and it's been there for years. UBA Bank has been there for so many years, and it's not going anywhere any moment soon. So every annuitant with us, their confidence is solid because they have a brand that has stood the test of time. and then nobody wants to do this with their annuity or their pension. That's why many retirees are coming to Heirs Insurance. So I believe your uncle or your uncle, like you mentioned, when he comes to Heirs Insurance, he will see that this is what many other retirees are benefiting from. And I can also say that Heirs Insurance is one of the highest paying. I think this is what many retirees even look at. Our pay rate is up there compared to the others. I mean, the other, insurance company that offer annuity. Yeah. So thank you so much for that question. So we'll take another question.
Yeah, Mr. Foley.
Yes, please.
Sorry, I was trying to raise up my hand, but my devices was not coming up. My name is Olarotimi.
Yes, please. Go ahead, please.
Yeah. This question goes to the presenter.
Okay.
Yeah, spoke so well about annuity. Fine. You're a marketer, you are selling market. I believe there's a framework around program withdrawal. If you want me to buy into annuity, I think it's better you balance the two options. The options were not balanced as far as I'm concerned from the presentation.
Okay.
Secondly, no, just listen. Secondly, it said under annuity program, you pay more than program withdrawal. Mathematically, can you demonstrate that maybe in your subsequent webinar and share mathematically? Assume, take some parameter assumption, demonstrate it, and let people see. Next to that, if I decided to buy into annuity and something happened to the insurance company by way of being distressed, what happened to my fund? Currently, we have an insurance in this country that had similar issue. And I have my uncle that bought an annuity as we speak for the past 6 months. No payments. Next to that, if I'm buying into annuity, you are going to invest the money. What happened to the returns on the money? And under program withdrawal, that's why I said the presentation was not balanced. Under program withdrawal, what happens to the return on investment? How do I stand to benefit from that? All the whole returns goes to the insurance company. And under program withdrawal, information had it. And that's why I say you need to balance the information. That either after 18 or 22 years for male or female, as the case may be, there's a provision under the law in PENCOM that you can still live on program withdrawal that may not even be up to what you are earning by way of managing the people that live beyond the expectant life. I stand to be corrected. That's why I say when you talk to people, you don't know people on this call. Some of us, we have understanding. Actually, somebody dragged me in because I've just stepped down from a company and he's targeting me and keeping on annuity. I say, I'm a financial expert myself. If you are talking annuity, I need a mathematical demonstration. It's an area that I've not gone before. It's a journey that I've not gone through before. And if I want to go through, I have to convince myself that if you invest my money, the return on that money, what happened? So these are some of my concerns that I want you to try and put clarity. Thank you.
Thank you so much. Thank you so much, Mr. Olarotimi. Just before I throw the question to our managers who are in the call here, of course, beginning with Mr. Emmanuel, the speaker, and we have other managers here who are also going to lend their voices. But let me quickly say thank you to you, Mr. Olarotimi. Your questions are very practical. And as a matter of fact, these are the questions, the kind of questions that show that you have done your homework or you are doing your homework, your own personal research. Yes, so just to 1, 2, 3, 4, about 5 questions you asked in one. I have all of them written here, but let me respond to the first one. You've said there is no balance in the information that was received in the past couple of minutes. Okay, probably this is your first time in this our webinar. It's a bi-weekly webinar. As a matter of fact, last edition, we took close to 1 hour to explain the boats. This webinar is called Annuity Edge webinar. The primary focus is annuity. All right. So, but however, we take time from time to time to throw more light about the other option before we even go forward. If you were here in the beginning of this webinar, you probably will notice that the speaker also took a few minutes to explain program withdrawal and the comparing both. However, in the last webinar we had, that was the focus, program withdrawal versus annuity. Obviously, I don't think you were there, which makes us understand why you asked the question. So maybe for time's sake, we're going to give you the link for the last edition. That was the focus, the balance between the both, right? You can take a time and look at it again. And then, the person that referred you here will also brief you more. We'll be here again in 2 weeks' time to further, throw more light. So let me throw the other question, the mathematical comparison between the figures for both, right? That's number 2. And then you ask number 3 question, what happens to the company what happens to the retiree if the company gets into trouble or something goes wrong with the company, right? Okay, let me stop here. There are 2 more. So I'll ask our managers in the call to go ahead and respond, and then I'll take the next 2 questions. Mr. Emmanuel, you want to go first, please?
Okay, yeah, let me go first. Thank you, Mr. Olarotimi. Okay, I actually wanted to address the balance, but thank you, Mr. Okoli, you have addressed it. So if I said I should start breaking down the whole thing, I will take more time, and I have limited time for me to talk on the topic. So that was the reason why I wasn't dwelling so much on the program withdrawal. So, but I want to also to one of your questions that you need a mathematical demonstration of the difference. Okay, now I will give you a figure. For somebody that has 10 million naira to purchase annuity, under program withdrawal, the person might probably be earning maybe 90,000 or 91, thereabout. But under annuity, the person stands to earn 120 something thousand or 130, depending on the age. Okay, so when we say we want to give a demonstration, so there are 2 major factors. First factor is the annuity premium, the figure, the RSA balance that you are using to purchase an annuity, and the DOB, the date of birth of the annuitant. So these are the 2 parameters that determines how high your monthly pension will be under annuity. But no matter what, on 10 million naira, you still be earning 120,000 and above. Whereas under program withdrawal, probably around 80 something or 90 something thousand. So that is that. Then also, you talked about what if the insurance company is in distress? What happens to your money? Now, when I was giving my presentation, I told you about the PFC, and you give an illustration of one insurance company that was in distress. You didn't mention the name, but I know the name. I also won't mention the name of that insurance company. Now, what happened was, during that time, it was insurance company, their warehouses, pension fund and assets before 2015. So when that thing happened, Pencom came on board and said, from henceforth, whether the PFAs or the insurance company, no one will be warehousing any pension fund and asset again. So it was in 2015, Pencom instituted the PFCs, which I mentioned earlier, the pension fund custodians, which are the UBA pensions, Zenith pension, and First pension. So these are the three custodians that warehouses, pension fund, and assets. So if you are on annuity with an insurance company and the insurance company is in distress, what happens is Nikon will take, because insurance is not annuity is not a product of an insurance company, it's just a portfolio. That's why I said earlier that it's a government-owned product. It's a portfolio. So if an insurance company is in distress, what government will do, they will take that annuity portfolio from that insurance company and give it to another insurance company. And I'll give you an instance. There is one insurance company called, I can mention. The name of that insurance company is called Tangerine Insurance. They were selling annuity. So they were in distress. Of course, the annuitants that under these insurance companies. So when they were in distress, NICOM revoked their insurance, the annuity portfolio, and sell it off to Haiko. So it is Haiko that is now managing those people under Tangerine Insurance to date. And those people to date are still earning their monthly pension. Okay, so if any insurance company is in distress, your money is not gone. Your pension is not gone. Your pension is being managed by the PFCs. What the NICOM and PENCOM will do is to revoke the portfolio from that insurance company and give it to another insurance company to manage as an administrator, whereas the pension fund and assets is with the PFCs. So that is that. Then also you said something that what happens to your fund, that of course they are making profits on the money, the fund is generating profit, that what happens to the profit, and so on and so forth. Okay, sir. Now, let's put a figure to it. Somebody that is earning, take for instance, is earning 125,000, 130,000 under annuity, and he brought in 10 million naira. By the time you calculate it for 10 years, the person has actually taken more than 10 million naira. And annuity still promises to pay after 10 years. That is for life. That's why in my presentation, I made mention of the fact that you cannot outlive annuity. So annuity will still continue to pay you even after the money you brought into annuity has been exhausted. So what that simply means is, of course, the profit that the money has generated over the years is the one that they will be using to pay you after 10 years. So this is how it works. You cannot outlive your annuity pension, because as long as you live, you continue to earn. If you live more than 30, 40 years after retirement, you still continue to receive your regular payment under annuity. So that is the way it works, sir. So thank you very much. Let me just mute here. Thank you.
Thank you, Mr. Emmanuel. I believe you have shed a lot of light on the question. So I have one of our managers, Mr. Iang, his hand is up. So, Mr. Ian, do you want to throw in more points to these questions? Yeah, go ahead, please.
All right, thank you, Mr. Okoli.
Yeah.
And Mr. Emmanuel, thank you for that beautiful session. I want to as well the retiree that just retired. I thank God for the fact that he could work and he retired successfully. So this is one of the things I tell retirees. The pension or pension on its own is part of their financial assets, which adequate attention must be given. Now, you see, if you have landed properties and your dependents are not aware, if unforeseen sets in and the person is no more, no one will know, oh, that this had been in existence. The property to just go. I am just trying to come in because maybe a retiree didn't come on time. So he felt Mr. Emmanuel did not really give the points the way it's meant to go. Now, I want to briefly talk about these facts. Programmed withdrawal, for emphasis sake, programmed withdrawal has been designed to pay based on an expected lifespan. And for now, nothing can rule that fact, except it is being reviewed and they change their operation, the way they operate. For now, it is operated on that fact. To start with, I want to say that once you come in with a lump sum under programmed withdrawal, it will be definitely converted to units. So, what is being used for trading? I am coming in here because our retiree is a financial expert. He will understand me. He will understand what happens in the stock market. What the stock market understands at that point is that units. And we have people that are on pension program withdrawal that we can use it for practical illustrations. So once this unit is converted, it is the units that the stock market understands. I'm just trying to make it simple. The stock market now understands that as the currency for trading. So if you look at it, the unit keeps on dropping, keeps on dropping, keeps on dropping. It gets to a point that it depletes. When it depletes, there will be nothing to use for trading again. At that point, the fund is exhausted. Well, I also understand the point where the retiree was trying to talk about the MPG, minimum pension guarantee. Yes, it doesn't still rule out the fact that programmed withdrawal is meant to pay based on an expected lifespan. So I feel Mr. Emmanuel did not want to really talk about programmed withdrawal to deepen it, because the topic was, why do retirees migrate or want more of annuity than programmed withdrawal? So that's the little I can say about that. Then to add to this, when I started with this fact that having pension, maybe doing programmed withdrawal, is likened to having an asset where you are the only person that knows. This is it. You see, if you go to Section 8 of the Pension Reform Act, Section 8, subsection 2 clearly states the process or the processes of making claims under programmed withdrawal. It's a very tedious, cumbersome process, one of which is you have to get a letter of administration. And it may take you years. As we are speaking, I have different retirees. The other one is close to 4 years now. They've not been able to make claims under programmed withdrawal. But when it comes to annuity, the case is different. I also want to use this time to add to the question that one person asked. I think that was Ma Precious. She said, what makes you a standout insurance company? One of the things that makes us stand out is the way we make our claims. Once unforeseen sets in, maybe the retiree is no more. Nobody prays for eventualities of such. But when we talk about life, we also talk about eventuality in the case where the person is no more. If such a thing happens, we are fast in making claims, in paying claims, because of the digital system that we operate. You can make records, you can make findings. So that is one of the things that differentiates us. And please, don't forget, sir, to the retiree. Sorry, sir, I've forgotten, I didn't look at your name. Programmed withdrawal works with units. It's not even the current value. If you understand what we call current value, which I know you understand as a financial investor. Thank you. I think I raised my case at this point. Thank you.
Awesome. Thank you, Mr. Hezekiah. I think you have done justice to that question in addition to what Mr. Emmanuel have said. So there's a question on the chat from Precious. I think it would be helpful if you can be posting the part of the Constitution that you are quoting. Okay, it's not a Constitution. So Mr. Hezekiah, you want to talk about that a little bit? But Mr. Hezekiah, you can also tell us what is claim. You keep talking about claim. What do you mean by claim, please?
Okay, I'm talking about debt claims. Debt claims, I wasn't specific. Debt claims. If unforeseen sets in, definitely there will be claims. They will make debt claims. Unforeseen, at this point, I'm talking about debt.
Okay.
So the process of making claims when it comes to program withdrawal is clearly stated in the Pension Reform Act, Section 8, subsection 2.
Okay, beautiful. So basically, when the retiree is no more, goes to join their ancestors, what Mr. Hezekiah is saying basically is that it is very straightforward for the family to come and collect what their father or mother left behind with the company. It is easy, very easy and straightforward, unlike in program withdrawal, which is a rocket science, and it takes several years, several back and forth, you know, and all. Okay, so yeah, thank you so much, Mr. Hezekiah. I see Mr. Dominic, your hand is up. You want to unmute and speak? Please go ahead.
All right, thank you. And good evening, everyone.
Good evening, sir.
First of all, let me appreciate Emmanuel Kuli for this webinar and for, thinking this through, that such things should happen in this time and era where there's a lot of misinformation out there. And I want to appreciate my colleagues that have given a word or two as regards this issue and the questions that have come up. I just want to add my own bit to everything they have said. Now, when we talk about, we are talking about annuity, and we see a lot of things that are happening in the system. Now, the area I want to touch will be in the area of, okay, when an insurance company goes down. I don't have, the man that asked the question, I don't know if he is conversant with the Merger, Acquisition and Takeover Act, as that was set by the commission called SEC, Security Exchange Commission. Now, that act is governed by 3 other acts. The first one is CAMA, which is Companies Allied and Matters Act. The second one is ISA, which is called Investment Securities Act. And the third one is SIA, called Security and Exchange Rules and Regulations. Now, all these 3 acts, they work together, and the purpose of this is to ensure that no, and if at all they have to go down, another financial institution in the same system or in the same sector of that institution going down or failing or falling would buy over their assets and also their liabilities, hereby take over that company. We can see what has been happening, and currently we can see how many insurance companies have been merging. There are several examples there that we can see in today's world, as some of my colleagues have mentioned. So these things are part of the things that ensure that companies or insurance companies don't go down. Now, when we talk about annuity, annuity is a fund-based investment. It's not a unit-based investment as program withdrawal is. Program withdrawal, once your money comes into the system, it is what invested as in units. But when your money comes in annuity, is invested as what? Fund. Is a pool of fund. Annuity is more of like a pool of fund where everybody they all contribute into the pool, and it's all invested together. Are you understanding? So these are the things. These are some basic areas that needs to be understood, so that we'll know why annuity is better. Again, the question could be, why is it that annuity pays more than program withdrawal? Now, the real answer to that is this. In program withdrawal, you are not getting the full value of your pensions. And it's because there are some things like charges, or should I say some fees and charges that are put on that program withdrawal value or pension that is being paid. Every retiree under program withdrawal is not enjoying the full value of his or her pension. You can quote me anywhere, and it's true. Go and get a statement of account of anyone that is retired. It is clearly stated that 7.5% of their value is going out under charges. 5% is going to the PFA, 1.5% is going to the PFC, 1% is going to PENCOM. So with all these charges, how will they be able to pay the retiree the full value of pension? So these things are the truths behind why we say or we claim that program withdrawal annuity pays higher and is better, and it pays for life. Because annuity is not, there is no charge on annuity. So you are earning the full value of your pension. And again, annuity is designed to pay for life. It's only in Nigeria that program withdrawal is practiced. Go and check it. Even other African countries, they don't practice program withdrawal. Only Nigeria. Withdrawal is to Nigeria alone. Other countries, it is annuity that is the norm. Go abroad is annuity. It is make us to understand, okay, annuity is ubiquitous. That means you find it everywhere. But program withdrawal is not. That should tell you that should even ring a bell to you that, wow, if this is something that is practiced everywhere in the world, and Nigeria also practices, then that means this is the right channel. This is the right channel. Program withdrawal has limitations. Imagine they are designing and telling you they might pay you. In many cases, or some cases, you hear they tell retirees they pay them 15 years or 18 years or 22 years, as the case may be. Say, as a male, you will be paid for 18 years, but as a female, they'll pay you for 22 years. How are they to determine how long you should live to earn your pensions? So you can see these are the limitations that program withdrawal has, and this is where annuity comes in to rub all of this off and make it clear that once you come into the system in annuity, you earn the full value of your pension, and it is for life. It is paid in perpetuity for life. That is the meaning of what annuity. And this is what makes Heirs Annuity special and unique. Because we are connected, there are so much conglomerates that we are connected to. And all these areas are portfolios of investments that we are connected in the family of Heirs Holdings. So we are not just alone. And this is why Heirs is the brand it is the brand, in fact, it's the best brand. In the whole of Nigeria, this is the brand to beat. Thank you. I think I'll rest my case here.
Awesome. Thank you, Mr. Dominic. When Mr. Olarotimi asked the question, I quickly perceived maybe he did not join the meeting on time. But I love those questions. I love the fact that he's asking intelligent questions, showing that he has done some check-ins also. So, Mr. Olarotimi, can I confirm that you have gotten some clarity? Are we able to address your concern, sir? If not,
yeah, thank you, Mr. Okoli, and thank you, Mr. Dominic. I think the last 2 or 3 segments of Mr. Dominic really makes that difference for me. Coming up with the charges, 7.5% being charged by program withdrawal. Of course, I have the rule, and I'm working. I've even sent some mails to PENCON to question 1 or 2 things, and they need to explain that, because this is my hard-earned money, and I need to invest wise. I need to take the right decision. Thank you for providing clarity. I appreciate you. Thank you. God bless you.
thank you, Mr. Olarotimi. Thank you for coming on board. Thank you. And we're expecting you very soon in Heirs Insurance. Please go ahead and reach out to our rep that reached out to you so they can guide you on the next steps. Please don't delay any further. The more you delay, you're losing money, really, because every month that goes by is money that is being lost. So, but again, you need to take your time. I agree with you 100%. You need to make your research and make a right decision. It's your hard-earned money. If you have any further questions, you can go ahead and ask the rep from Heirs Insurance that is talking to you, or privately. And again, okay, one more thing. In our next edition, we're going to do something very, very practical, because the question Mr. Olarotimi asked, spurred some thoughts in my heart. So we're going to share our screen. We're going to bring bank statements, right? We're going to share our screen and show you. Maybe we'll blur the name of the PFA on those statements, yeah, so that we don't play down on any company. But we're going to show you people whose balance has gone to 0. When we say these things, some retirees say, no, you people just want to sell. It's not true. You're selling. You just want to project your own company or your own annuity. We'll do the practicals, right? We're going to bring practical statements and show you how this unit reduces over time, even the one that has gotten to 0, and the retiree is still alive, and payment have stopped. These things are not what we cooked up. We'll show you. We'll share screen and show you these things. Why many retirees are saying, you know what, I don't want to take this risk. I'm going to annuity. With the insecurity in Nigeria currently, with the way people, in fact, let me tell you something. Some of the people abroad are afraid of putting money in Nigeria because they know that Nigeria is not even secured. I mean, Nigeria is shaking. We can all agree that Nigeria is shaking terribly right now. And anything that happens with security or whatever, it affects the financial sector. So this things fluctuate. But with annuity, even if Nigeria is on fire, even if the economy is going up or down, you have a contract. It's a legally binding agreement with the retiree. I mean, between the retiree and the company. So you must be paid. There's no stories about that. So for retirees who desire peace of mind and don't want headaches and back and forth, they just move quickly to annuity. Okay, so our time is fast spent. We plan to end by 9 p.m. Our next edition will be on the 7th of December. It's a Sunday like this. We do this bi-weekly. I want to ask you to talk to any of your friends and colleagues. If you want us to come to your office, your company, and share, we'll be glad to do that. We'll be glad to physically, right? So contact the person that brought you here, that gave you the link. We'll arrange for our team will be at your office to share with your other colleagues in the office and help provide this clarity so they can make informed decision. Okay, I see Mr. Karim. Mr. Karim, are you still in the house? Mr. Karim, M.A. Karim. If you have a question, I see Mr. Sunday, your hands are raised. Okay, Mr. Karim, I'm glad to have you on the call. I celebrate you, sir. So you want to unmute your mic and speak briefly, maybe after Sunday. Sunday, please unmute, please.
All right, thank you so much. My first time I've been here. Good evening, everyone. Thank you for the really good explanation. Just with little fund that I put into here is through one of the bank UBA branch. I think that should be in camp. Now, I want to ask a question, and the question is that based on this webinar today, that retirees or somebody that's about to retire, living outside the country or work outside the country of Nigeria, and though I joined the platform lately, what is the plan?
Okay, let me
because I've asked these questions. Yeah, I've asked this question from your branch, and I think I didn't. The explanation given to me was not convincing enough or clear. So, what is the plan? Is it possible, or is it not possible outside the other my investment in here is that I've done? Thank you.
Okay, so Mr. Sunday, I want to confirm I got you clearly. Your question is, a retiree is outside Nigeria, right?
Yes.
How will he convert to annuity when he's not physically in the country? Is that your question?
Not this. Yes, not even work in Nigeria. He works outside Nigeria. He has to work outside Nigeria, and
okay.
It's about to retire, or even the one that have retired also. How does he work with it?
Oh, okay, I get you. So he's living and working outside Nigeria, but he wants an annuity plan in Nigeria.
Yes.
100%. 100%. Let me ask some of our managers here to respond. We have a plan for that, but I'll leave our managers to respond. So, Mr. Ibrahim, are you on the call? You want to respond? You can unmute your mic.
Yes, I'm on the call. Good evening, everyone. Good evening, my dear colleagues. Good evening, our prospective retirees. May God continue to bless you all. So, based on the question you asked, that can somebody from outside country who is about to retire from other, companies in other countries, the answer is no. It's strictly based on retirees in Nigeria, or people who are retired who have work, in Nigeria for some years. So after retirement, you can, choose either program withdrawal or annuity based on your choice. So for those who have worked for many years under, other country, so the answer is no. You cannot choose because in those countries they have their own pension schemes. They can only go for the one they go for. So that's it. So I want to give kudos to Mr. Dominic and other presenters, Mr. Emmanuel, for the wonderful presentations. So in addition to what they have said, all is that, we need to understand what we call program withdrawal or annuity. It's not under compulsion that you choose program withdrawal or annuity. Before you pen your pension documents or your signature on any pension documents, you need to read the terms and conditions very well. What do you really understand by program withdrawal? We all know that program withdrawal is administered by pension fund administrators. By the list of PFAs we have in Nigeria's Stanbic IBTC, Power Pension, Lead pensions, what they do is that when you are still currently active in service, they take some certain percentage from your salary, kept, against your pension. Then when you retire from service, they merge it together with which we call accrued pension rights. So when you retire from service, we call it accrued pension rights. Now decide either to go for program withdrawal or annuity. So let me give brief explanation about program withdrawal or annuity, of which my colleague have been saying about, since morning. So program withdrawal is administered, by pension fund administrators to pay retirees for an expected lifespan. We human beings, we have expected lifespan on Earth. Likewise, every other animals. It means what begins must end. So that is what program withdrawal is all about. When they pay for some certain years, like 10 years or 15 years, highest, let me say 16 or 17 years, they are going to stop monthly pensions. It's not what is written by any insurance companies, against other PFA and is not what is written by PFA or for any insurance source person. It is the law guiding pension in Nigeria. When you go to any stationaries, close to you, you can request for what we call Pension Reform Act. So it is stated under Pension Reform Act that Programmed Withdrawal pays for unexpected lifespan. So on the part of beneficiary getting claims, under Programmed Withdrawal, before you can get claimed, you need to get what we call letter of administration from courts. I think you must have heard some retirees children or families that want to claim their money and the pressure, the stress they pass through before they get it, the claim, all those things, at the end of it, when you look at the stress, they are going to leave the phone here. They will not proceed anymore because of the stress involved in it. You getting letter of administration alone can cost you like a year or a year and a half or 2 years, depends, on the link you have for you to get what we call letter of administration from court. But in case of annuity, it's not like I'm trying to defend annuity. It is what I've done. Like 2 months ago now, I did one death claim now. Right now, one death claim. I didn't pray for that, but that one is only there in the case of any unforeseen circumstances like that. We don't pray for it. We don't pray for any of our clients to pass on for now. But there's nothing we can do to question God over it when it happens. You understand? So when something like that happens, annuity serve as a will for all retirees. So when you sign up annuity right now, you are rating, it's as if you are rating your will. That should the case, if a person or something beneficiaries. So at that point, we are going to request for the full name, date of birth of your beneficiary. Maybe you have 1 beneficiary or 2, 3 or 4 beneficiaries. You can split, in the average of 100%. You can say, okay, 25% for my wife, another 25% for my 25% for my children. Making 100%. And anyone who is not on the list cannot claim the money. That's in case of annuity. Are you getting me? So annuity serve as a will for all retirees. So at least with all these presentations from one of my all these my colleagues, with what they've said about annuity, you should be able to pick the differences between Programmed Withdrawal and annuity. The reason why annuity is better off than Programmed Withdrawal. Though it is your jurisdiction to pick the best pension schemes that you know that this will be okay for you. Then when you look at the payments as well, when you collect your templates from the PFA, your template is going to show your total RSA balance, the amounts they want to pay you monthly under Programmed Withdrawal is going to be stated on your templates, and the amounts they want to pay you as your gratuity as well. So the same template is what you bring to the insurance company to run quotes, the amount we are going to pay you for life. So when you see the difference, you will discover that annuity is always paying higher than Programmed Withdrawal. Understand? So that's all I want to say about this. Thank you very much, Mr. Emmanuel, and thank you very much for everyone for your attention.
Thank you. Thank you, Mr. Ibrahim. Mr. Ibrahim is one of our senior managers. So, gentlemen and ladies, we are going to draw the curtain in 5 minutes, right? We have overshot by about 20 minutes. We don't want to keep this more than 1 hour every time we meet. So the next session will be in 2 weeks' time on the 7th of December. Like I said earlier, we're going to be very, very practical. We'll share our screen and show you documents, show you bank statements, RSA statements, and practical conversations with people who have had some challenges with where they were coming from and why they came to Heirs Insurance. In fact, one of my retirees, he was on Programmed Withdrawal by compulsion because he didn't know when they moved him there, and then he had to wait for 1 year before he will move over to annuity. When he was there, he was earning about 97,000. As soon as I showed him the quotes, he had about 50,000 naira difference, 50,000 naira difference. Imagine he had lost 50,000 naira for 1 year, because from the point of retirement, you could have actually gone straight up to annuity. You didn't need to go through program withdrawal first for 1 year before coming to annuity. I mean, that 50K times 12 is a lot of money for some families, for some people. Somebody needs that money. If you don't need the money, somebody needs it. Maybe your uncle, your child, your in-law, you can give it to somebody if you don't need it. But I know that everybody needs an extra dollar, an extra naira. So why do I want to stay so long with program withdrawal and lose money in the long run, whereas I could have the money now, the extra money right now? Okay, so just to add to what Mr. Ibrahim said about the question from Mr. Sunday, can somebody who is outside Nigeria have annuity in Nigeria? I agree with Mr. Ibrahim 100%. The answer is no. You have to work in Nigeria, have your accounts with the PFA. While you are working, they're taking the money you are contributing until you retire. However, to add to what he said, Heirs Insurance has what we call Annuity Light, LITE. This is for anybody, whether you are abroad or you're in Nigeria and you want annuity. You can walk up to Heirs Insurance and say, you know what? I have 50 million. I want to personally purchase annuity. As a matter of fact, it's an arrangement for private individuals, irrespective of your company where you are working or the government. You can personally purchase annuity by yourself. In fact, this one works for people who are business people who don't have a proper employer, organized company, but you're a businessman in Nigeria or outside Nigeria. You can just say, you know what, I want to pay. I want to buy it. Then we can give you a quote, and then you are on annuity straight up. So yes, we have an arrangement to solve that problem. The first answer is no. You have to be in Nigeria and work in a Nigerian company. And then when you are retired, you don't even have access to that money. You are either going to provide program withdrawal or annuity. By default, you can't withdraw that money 100%. Maybe you can get the percentage out of it, the lump sum. But you can still have a personal arrangement. Even if you want to top up on whatever you get from your regular, annuity from your PFA, or when you move to annuity, you can have another arrangement by buying annuity light, and then you have more money. So, Mr. Sunday, I don't know if that clarifies. Does it make sense?
Yeah, it makes sense. Annuity light, annuity light, you call it. Okay, I'll contact the I'll contact the branch. Okay, annuity light. All right. All right. Does it have a specific amount that should be invested to buy it?
No. Typically, the higher the amount, the more your monthly payment.
They take.
Yeah, but I mean, typically from 10 million. I don't know if there is a minimum. I'm not sure. Can any of our managers help me out here? Is there a minimum? Mr. Dominic, is there a minimum for annuity light? I don't think. Mr. Iyang?
Hello, everyone. Good evening. I don't think for now there's minimum for annuity lights, but for now, annuity light before you can do anything like annuity light, that will be around January or February. Definitely. Right now, but is currently on under suspension for now. So if you have 2 million, 4 million, 5 million, you can, pick annuity lights with that kind of figure. So I think that one is very okay on that.
Perfect. So there's no real minimum, basically, but like Mr. Ibrahim said, in January, we are launching it again. We temporarily paused that, but in January, it's coming back from the information we get from our headquarters.
Thank you so much. I appreciate it.
You're welcome. Okay, any final word, Mr. Karim, M.A. Karim, I would like to hear your voice. Any feedback or questions? I know you came in towards the end. M.A. Karim, D.I.T. You want to unmute and say a word or two before we go? I see Muhammad Yassin. And any other retiree who just want to maybe give a feedback, we'll be glad to take one last word before we go. Okay, if that is not forthcoming, I think we need to close. Our time is fast spent. Thank you so much, everyone. Thank you, our guest speaker, Mr. Emmanuel Babatunde. We greatly appreciate you for the insightful session tonight. Thank you, all the managers on the call, Mr. Dominic, Mr. Ian. Thank you so much, Mr. Ibrahim, and all our financial advisors who are here, and all the, of course, retirees who joined us. We thank you. See you again next week. Next month, 7th of December. And then we want to ask all our retirees and prospective retirees, please go ahead and contact your referral, the person that brought you to this meeting. Give them your retirement letter, your age declaration, passport photograph, utility bill, NIN slip, statement of account from a PFA, or the name of the company you work with. There's about 8 items, 8 informations you need to submit to them. They will help you process and then migrate you, move you to annuity, Heirs Annuity. You need to do that ASAP and not procrastinate any further, because these rates are very good right now. Our Heirs Annuity rates are very good right now. I want you to take advantage of the rates we have now. If you are still on the fence, you're thinking, should I not? The best time to migrate to annuity was yesterday. The best next time is today. Please go ahead and close that deal with your rep from Heirs Insurance, and join us, and you'll be glad you did. Thank you once again. Good night. See you on the 7th of December by 8 p.m. Bye for now.
Thank you, Okoli.
Thank you, sir. Thank you, sir. Bye, everyone. Good night.